Acquired intangible assets, both in a business combination and outside of a business combination, are subsequently measured under one of two measurement models, either the cost model or the revaluation model. Under the cost model, after recognition as an asset, the acquired intangible is carried at its cost, less any accumulated amortization and any accumulated impairment losses. Amortization is the systematic allocation of the depreciable amount of an intangible asset over its useful life. Said another way, amortization enables the cost of the intangible to be expensed over the period in which an entity is deriving a benefit from it. Impairment losses are the amount by which the carrying amount of an asset exceeds its recoverable amount. In other words, when the value expected to be derived from the intangible asset is less than its carrying amount, an impairment loss is immediately recognized, rather than deferring the recognition of the expense through amortization at a later date. Under the revaluation model, the intangible asset is carried at its fair value at the date of the revaluation, less any accumulated amortization and any accumulated impairment losses. Fair value means that there is an active market. However, it is uncommon for an active market to exist for an intangible asset. Although it could happen if you're dealing with fishing licenses, production quotas, or freely transferable taxi licenses. As you can guess, the revaluation model is rare because there must be an active market for the intangible. When an acquired intangible asset is revalued, the carrying amount is adjusted to the revalued amount. At the date of the revaluation, the intangible asset is treated in one of the following ways. First, the gross carrying amount is adjusted in a manner that is consistent with the revaluation of the carrying amount. Or, 2, the accumulated amortization is eliminated against the gross carrying amount. We'll dive into more details on the subsequent measurement of intangibles within this topic. But just remember that whatever measurement model is applied by the entity, this represents an accounting policy election.